Good morning, everyone. Justin here from ShareWise, Senior Investment Manager. So I just wanted to welcome everybody on board. Thank you very much for attending this webinar. So obviously, first things first, just a couple of disclaimers. One thing is that the information provided by ShareWise is of a general nature and does not take into account your personal financial situation, objectives, or needs. The information presented is for informational purposes only. Trading stocks and other securities carries risk, so please be aware of that risk. Okay. So thank you again for coming on board this webinar today. Just about to start sharing my screen. Hope you all can see that. Again, Justin here from ShareWise. Thank you very much for attending, everyone. Again, I'm one of the senior investment managers here at the firm. And today we'll be going through Trump investing in AI. Okay, so if you do have any questions, you're more than welcome to ask away. We'll obviously answer everything at the end of the webinar. Okay, but for the moment, we will be obviously going into this current topic, which is Trump investing in AI. So obviously, first things first, just a few disclaimers. The information provided by ShareWise is of general nature and does not take into account your personal financial situation, objectives, or needs. Okay. The information is purely for information purposes. And again, trading stocks and securities carries risks. So please make sure you are prepared to take those risks. Okay. Excellent. So can everybody see the screen okay? Yeah, beautiful. All right. So first of all, Trump has announced a few things, right? So just the other week, there were a few massive announcements, one of which is obviously the historic investment in artificial intelligence. So Donald Trump has announced a $500 billion allocation in artificial intelligence, okay? So this is going to be towards AI development and infrastructure. Their goals include, advancing AI research, creating high-quality jobs, ensuring the United States remains a global leader in technology as well. Now, there's been a few questions that I've been asked just starting this webinar. Now, rest assured, I'll answer them all. I'm going to answer them at the end of the webinar. So thank you, Stan. Thank you, Martin. I'll go through some of those questions at the end of the webinar as well. So please stay tuned. I might even answer a couple of those questions, within the webinar anyway. Okay, so first things first. Let's kick back off to where we were. So they're going to be focusing on fostering public-private partnerships to accelerate innovation as well. There's going to be an emphasis on establishing the United States as the hub of AI and ethical AI development as well. So the Trump administration, in short, have announced an initiative called the Stargate project. So this is aiming to invest up to $500 billion in artificial intelligence. So with infrastructure to be built out across the US, this venture is a collaboration between OpenAI, SoftBank, Oracle, and MGX, with the primary goal of constructing advanced data centers to bolster AI development and maintain US leadership in the field. Okay, so the key details of this project is a few things, really. Obviously, these are the sectors that will really benefit. We'll be diving a little bit deeper in these sectors. But the key details of the Stargate project are, first of all, the investment and timeline. So the first thing is the project plans an initial deployment of $100 billion with the total investment reaching $500 billion over the next 4 years. Okay, so the initial funds are allocated for the construction of data centers, with the first already underway in Abilene, Texas. Next is the infrastructure development. So the initiative includes building 20 data centers, approximately 500,000 square feet. These centers will house advanced computing resources necessary for training and operating sophisticated AI models as well. Okay, so what this is going to do is this is going to bolster job creation. So the next part of the details really is that the project is expected to create over 100,000 jobs in the United States, spanning from construction, technology, and operational roles as well. So, it's not just technology that's going to benefit, it's a wide range of services, really. Okay. So from that perspective, we've also got energy considerations. Given the substantial energy requirements of AI data centers, the administration plans to facilitate the deployment of necessary power infrastructure, potentially including fossil fuel-based energy sources, aligning with current energy policies as well. Now, I've had a few questions recently from some investors around NVIDIA, right? So last week we touched on NVIDIA. I didn't want to do this webinar without touching on that as well before I continue on with this. So first of all, NVIDIA, quality company, they still remain I would say the picks and shovels of the gold rush in AI. And at the end of the day, this DeepSeek issue that's occurred is really the beginning of, I would say, really just a further push to bring on board artificial intelligence to the general public, right? But what's going to happen here, what we believe will happen here anyway, is Microsoft, Google, and all of these big tech conglomerate companies who've been spending billions of dollars in artificial intelligence will only need to ramp up more investment in this area in order to keep up with other businesses and to stay, I would say, on track to being the leading businesses in artificial intelligence. And by doing this, there's only going to be one major beneficiary to this, and that's still going to be NVIDIA, right? Now, there will be volatility. We've got interest rate decisions that have just been announced in the US as well. We're going to touch on that. And we've also got, as I said, this massive $500 billion investment in AI that's just been announced from the Trump administration. But we've also got a wide range of earnings reports to be released in the next coming few weeks as well, right? So last night we had Microsoft, Tesla, which announced their earnings. Interestingly enough, Tesla's up after hours, whilst Microsoft is down, and Microsoft did report an outperformance, whilst Tesla reported an underperformance. So it's interesting. But we're going to touch on this. But I just wanted to touch on NVIDIA for those that might have listened or tuned into the previous webinar. So at the end of the day, there's still, we believe, going to be a massive beneficiary of this, because in reality, the hyperscalers are going to only need to invest even more into this. So I just thought I'd mention that before we continue. Now, national competitiveness. So first of all, we already mentioned the others, such as energy considerations, amongst job creation, infrastructure development, etc. But national competitiveness. So the administration is emphasizing that the initiatives here are crucial for maintaining national competitiveness, particularly in relation to countries like China. Okay, so by developing AI infrastructure domestically, the US aims to retain sovereignty over critical technologies. So we would imagine that businesses that are the bolts and the bolts and nails of AI data centers are going to also be massive beneficiaries of this build out. So we still think there is a lot of an opportunity here to be had as an investor in the sector, and we wouldn't let the news create too much uncertainty and fear here. We would look for opportunities that are well undervalued to be buying as investors, because that's the reality. There's always going to be news. There's always going to be things coming out that are going to disrupt the market. It's just natural, right? But a part of investing for growth is being ready for this. And here at ShareWise, we are. Okay, so we've got a wealth of opportunities on the advisory desk that we can talk about. Next week, I'll be rolling out another opportunity that I think will be fantastic for clients as well, that will be going into next week. But the short end of this story right now is we want to continue to remain the course, and we want to continue to be open-minded to what there is available to us today, all right, for the long term. So it's important to note that while the Trump administration supports the Stargate project, the funding is entirely sourced from private sector partners, okay? So with no direct government financial involvement. The administration's role here is, includes expediting regulatory processes. So, this will provide support to ensure the project's swift implementation as well. This initiative reflects a strategic effort to position the United States at the forefront of AI development through substantial private investment and supportive public policy measures as well. Okay. So again, the industries that are poised to really benefit here are healthcare, okay, defense, smart cities, manufacturing and automation, education, and fintech. Now, I'm going to go into a bit more detail about what this means. But first of all, with healthcare. So what this means for healthcare is essentially the businesses that will benefit from AI are AI-powered diagnostics and personalized medicine improvements in genomics revolution, streamlining hospitals, hospital operations, and AI-driven resource management as well. Okay. From the defense space, we're looking at enhanced cybersecurity measures, autonomous systems for national security as well, investment in AI-driven threat detection and response systems as well, which is pivotal in some of the advancements that we're seeing come out of China as well, right? So we can only imagine just how much more will be invested from the US in this area. Smart cities. So the deployment of AI for efficient traffic management, energy conservation, and urban planning as well. So there's just so much here within each sector that can seriously benefit from the growth in artificial intelligence, and their underlying revenues will probably rise. Their cost management will be more efficient. So their bottom line will significantly improve. Right. So then we've also got enhancing public safety through AI, powered through surveillance systems as well. Manufacturing and automation. So, we've got advanced robotics for increased efficiency and reduced production costs. Education. So the development of AI tools for personalized learning and skills training, encouraging STEM education to prepare a future-ready workforce as well. And then we've got fintech, right? So fintech through AI in monetary transfers, even, looking at the banking system and how that operates from, all of the top conglomerate banks and how they operate as well, and automating some of their functionality. Okay. So there's a wide array of opportunities here within each sector that throughout 2025 at ShareWise, we're going to be bringing towards our investors' needs and wants. Okay. So obviously all general advice, but the point here is these sectors will severely benefit, and we've got a lot of opportunities here. So how we'll find the big winners? Obviously market research. We, first of all, we analyze the market trends and market dynamics significantly. Macroeconomic policy is one of our major sort of, I think, backdrops that we use to have as a support for what we're claiming to be an opportunity as well, right? Identifying high growth opportunities through earnings growth, earnings reports, but also thematic changes in global trends, right? But that plays into, obviously, industry innovation. So, screening for innovation. So we prioritize strong IP portfolios as well, and groundbreaking solutions. Assessing scalability and market readiness. And we're going to have a lot of these opportunities that I'm going to be presenting to my clients. And if you want to work with me and get access to a number of these opportunities, I'd highly recommend discussing with me further. Okay. So the next big thing is, bear with me, I just want to make sure you can see the screen. Yep, excellent. So the next big thing that we focus on to clarify the big winners is, well, first of all, targeting businesses that essentially have an excellent outlook from their earnings results, but ensuring that they're in line with macroeconomic policy of the year as well. So at the moment, interest rates are a big talk, inflation is still a big talk of the town and a major risk. for investors. So we want to make sure that the businesses that we're recommending will be in line with macroeconomic policy as well. Okay. So we're going to be obviously doing all of that, putting together quite a bit of a structure in the next coming weeks for a lot of our clients to be getting into some of these quality names that will reap the benefit of this AI investment that we're seeing roll out in the US. Okay. We've got a diversified strategy as well. So that diversified investment strategy is targeting a mix of startups, mid-caps, and large cap companies and industry leaders as well, right? So we're going to be really balancing that risk through allocating capital into some of the, I would say, high-quality companies, a bit of speculation here and there, but focusing on top-quality businesses with excellent earnings growth potential as well. Okay. Now, why AI? Okay, why AI? A lot of people are saying, a lot of Aussie investors are saying, why are we looking at AI? I mean, isn't it a risk? Isn't it still the beginning phases? Isn't there still, I would say a lot to uncover with artificial intelligence? And the truth is, yes, there is. But that's what you want as an investor, because at the end of the day, if you want capital growth, if you want alpha, if you want to outperform the market, you need to be ahead of the curve, right? And so the reason why we're saying AI is the way to go is because AI can be placed in multiple sectors. And the reality is, if you're not getting invested now and you're not adequately looking for the right opportunities before they come to the public, to the massive public, you're going to really be late, right? And so we're here to try and cover that. So why AI? First of all, projected to add over $15.7 trillion to the global economy by 2030. That's huge, right? So if you say that it's really nothing, well, you're probably been living under a rock, right? Because artificial intelligence is on the run and it's growing everywhere. And if you're not investing in businesses that are in that growth phase of AI, well, you're going to miss the next big cycle, right? And so AI is projected to add over $15.7 trillion to the global economy by 2030. So the high growth sectors include robotics, autonomous vehicles, machine learning, and natural language processing as well, right? So AI-driven companies have historically outperformed in the stock market over the last 12 months as well, right? And the opportunities here are going to be huge. And we've got a lot of recommendations that we'll be rolling out. So we've got another webinar next week. I can't wait for you all to attend, which will be actually addressing one main business that we think will actually perform quite well for 25. Obviously, there'll be a lot of risk involved with anything we invest in, but the reality is you can't get a quality return without any risk, right? So where will the $500 billion flow? Well, AI research and development. So grants for startups and established firms will obviously be where a lot of money will flow to. National AI infrastructure, as I mentioned. So investments in cloud computing and data centers will be another main part of the outflow. Industry applications like healthcare, defense, and smart city technologies will obviously reap the benefits of this outflow as well. And then education and upskilling for understanding how to improve AI as well. So, these sort of AI specific certifications will probably be on the run for 25. Okay. Now, why does this matter for investors? Well, let's have a look. First of all, early adoption in some of these industries are going to be setting you up for a good return for the long term, right? So anything that you invest in, I'm sure you're aware of, if you look at your portfolio right now, when you got in before the herd, you've probably done well, right? When you got in after the herd mentioned it to you, you're probably sitting on a loss, right? So early adoption in some of these technologies are going to bolster portfolio returns for exponential growth. Industries that are going to obviously benefit from the support are often seeing higher valuations as well. Okay, so what we're going to do here is find the industries, and then we're going to look for the opportunities that are going to obviously be had in these industries from the businesses that will see higher valuations from incorporating AI as well. Okay. And obviously mitigating risks and maximizing returns through a share-wise in our investment selection by diversifying portfolios across AI-focused investments that can maximize your returns, but doing it in a way where we're mitigating your risk as well. Okay. So I did have a couple of questions here from quite a few clients that I will address. But obviously, just before we proceed, I'm going to give you a bit of a why, right? So why partner with me? Well, we've got some proven track records on identifying high growth opportunities, access to exclusive market research, and AI-focused investment strategies will be a big part of our growth story here at ShareWise. And again, you've also got some investment plans suited to, all risk profiles from a general advice model as well. Okay. So from that perspective, we operate a full service brokerage here at ShareWise, meaning that you'll also get a one-on-one dedicated advisor to work with. And we'll be obviously introducing these opportunities week by week, day by day, month by month. We'll do regular strategy sessions, portfolio reviews. In the coming weeks as well, all the Aussie income investors will be glad to hear I'll be releasing some exciting, I would say, global income and domestic opportunities for investors as well that will protect portfolios. So it's not just growth we're focusing on. We are also looking at diversifying into some high quality, high yield opportunities. Okay. So obviously we want you to grow here with us at ShareWise. How we'll work together is from, again, portfolio reviews and analysis, the investment roadmap we will lay out for you in the strategy session when you come on board, ongoing updates and insights from various market leaders as well, and investment managers that we do sort of track in the US as well, and trusted expertise here at ShareWise. Okay. So you'll get ongoing support, customized investment strategies relating to AI, and a wide array of different thematics as well. Okay. Now, what I'm going to do, guys, is I'm just going to run a bit of a poll for everyone. So while I do that, I'm going to also request that if anybody has any questions, you're more than welcome to pop them in the question box while I answer some of the other questions as well. Okay. So that poll should be running now. Now, how can we benefit from this was a question from Stan, one of the attendees. So how can we benefit from this? Well, that's a really good question, Stan, because there is a lot of risk out there, right? The way we benefit from this is looking at the industries which I've already mentioned that should be empowered through incorporating artificial intelligence. And what we're going to look for is businesses within each industry subset that will basically, let's just say, benefit from not only incorporating AI, but maybe even the businesses that will also benefit from offering products that will improve AI development as well. We're going to look at earnings growth quarter by quarter. We want that to be a specific figure. We want sales growth to be a certain percentage quarter on quarter as well. And we also want a decent interest cover as well, because what we're seeing is there's been some conversation, some rhetoric around a reversal in quantitative easing as well in the US. So that's something we want to discuss as well over the next few months. And we want to really monitor to protect against downside risk, right? Now, again, that doesn't mean that we're going to see the Fed sort of shift to increasing interest rates necessarily. It may just mean they may pause for a little while, right? And what's going to really dictate that is inflation. Okay. So for the moment, again, we're going to be looking for businesses in those sectors, and we're going to be recommending them as the weeks roll out as well. Okay. We're just going to be focusing on some of this earnings season as well before we dive into deep with significant allocations. But we will be recommending quite a few different positions in the next coming weeks. Okay. So rest assured, if you do want to work with us and get some quality recommendations, you do want to sort of organize yourself for a review with myself. And we'll discuss that with a bit more depth. Okay. Next question was, how do you know which will come out on top? there are too many to invest in them all from Martin. That's a really good question, Martin. And I think I've just touched on that in the previous answer. So we're going to look at earnings growth. We want earnings growth to be a specific figure in some of those larger mid-cap companies. And we want to see innovation in areas that we think will benefit the most from AI. And we want to make sure we're well diversified across defensive positioning as well. Okay. But we will be rolling out the reasons within each recommendation when you come on board as a member anyway, mate. So that's a really good question. And the way we will know is essentially through company reporting, earnings growth, and their projections. And again, we will discuss that in detail. If you do want to book a review, I'm happy to discuss that with you with a bit more detail. Just a bit short on time. Got to get into a wider range of client callbacks in the next half an hour. But for the moment, again, we would say earnings growth, revenue growth, and sales growth by a certain percentage, which I can go through with a bit more detail. We'll look at the overall technical analysis to see when a good entry point is as well for some of these businesses. Okay, so I'm just going to end the poll now. Thank you very much, guys. I did have a question that just popped up here. So do you see opportunities within Australia in the space, or are you just US focused? Really good question by Surya. So we've actually got investment opportunities in all areas, Surya. So not just the US. We're actually looking at some Chinese companies as well. We're looking at Australian. We're looking at basically finding companies, because you see, it's not just the US that's going to be doing this. There's going to be a global expansion in artificial intelligence. So that's an excellent question. And the answer to that is not just US. We're going to have international recommendations as well, and international businesses in sectors that will benefit from AI. Okay. Paul's asked, do you do options? Well, Paul, we are actually introducing options soon, by the way. Not yet. But we will be doing that in the next quarter. So we can discuss that with a bit more detail as well, Paul. And thoughts on Palantir? Very good question. Very, very good question. What I'll do is I'll just share my screen actually, and I'll take you through Palantir, right? So that you can hopefully benefit from that. And if, again, you want some more detail, I'd be happy to sort of take you through that with a bit more detail as well. Okay, so Palantir, PLTR is the ticker, quality company. Look, Palantir is not exactly a recommendation, right? Now, this is all general advice. However, I did buy it a couple of times for clients last year. We've done really well on it. Now, at this stage, you know, if you have a look at some of the movements we've been seeing on Palantir, it's been creating significant higher highs and higher lows, okay? So at this stage, if you have a look at the market structure for the company, since its earnings result back in August of 24, we've seen a significant uptick in movement, right? So we've gone, created a higher high, higher low, breakout of the previous high, then a higher low, consolidation, higher high, consolidation, higher low, higher high. Then a change in market structure in January. Now, this was because of some of the rhetoric from the Fed around a change in monetary policy potentially. So, you know, but what we saw from that was that really it was unnecessary, some of that rhetoric, because inflation was under control. And so what we saw was a lot of the tech stocks that got sold off got bid up again. So new low here, and then bang, we've moved up higher, higher low, and then here we are now. Right. So the question is really, where is Palantir going from here? Well, the reality is, essentially, we think we might see a bit of consolidation, right, before going anywhere. But technically, it looks like it's setting up to break out again. Well, I'd be very careful though, because it is reporting on Monday, the 3rd of Feb. So if they do announce an underperformance in earnings, we could see a significant sell-off take place. Also, some consensus of analysts are targeting about a 40% downside on Palantir. So we'd suggest to be a little bit careful. All right. Now, that being said, it doesn't mean that it might not blow out. Okay. So it could blow out the recent high. Okay. But all we're saying here, mate, is just be careful. Don't go all in. Be mindful of the risks involved. and the fact that we've got a significant number of earnings results to be released, and that could weigh in on the market. And we've also got, again, economic GDP, a lot of different reports coming out in the next couple of weeks and earnings. So I hope that answers your question, mate. If you do want a portfolio review, please leave your details. If you want to discuss things further, you're looking for a portfolio manager, leave your details, guys. Thank you very much for attending today's session. Please be tuned. We'll be announcing another session in the next week for a couple of specific companies we're looking at as a potential buy, with general advice, of course. And please be mindful that there is risk out there in the market, and don't go all in. Be mindful of your risk. And if you want to talk to us, we're happy to help. Take care. Thank you very much for attending the webinar. All right.